My name is Josh Rosenthal from Sealevel Insights and SealevelInsights.com. This is for people, entrepreneurs, business owners who want to keep cash in the bank, who want to keep it open, who want to keep your dream alive. These are things that you need to know. Some of the times, these videos are going to be something that are directly useful to immediately go keep cash in the bank. Other times, they're going to be things that we're going to build on. You've got to have this foundation before you can learn some of the more complex stuff that keeps cash in the bank. You have to know a handful of really basic things. So today we're going to take a look at the profit and loss statement. If you already know what that is, I still want you to hang with me. Maybe you learned something new about it, but also we're establishing a baseline here that we can build on, that if you know how to read these statements, then you'll be better equipped to keep cash in the bank. So here we go. There are really four parts to a profit and loss. And we're going to talk about this thing here that we often will refer to as top line, because if we refer to this as top line, you'll see that that's why we refer to profit as the bottom line. So in the top line, this is the stuff that you do in your business that people pay you for. So say my background is in coffee. If I sell you a bag of coffee, then that is revenue. But if I have a coffee roaster that I want to get rid of so I can buy another one, that is not revenue. That's disposing of an asset, and that doesn't belong up here. So these are the things that you do that you are trying to sell to people. What happens next on that profit and loss is you kind of break this up and you go into a space really that is your variable costs. So I'm going to put a V here for variable. So within your variable costs, these are the things that move with your revenue. So if revenue goes up, the variable cost goes with it. If it goes down, variable cost goes with it. And if you're a good manager or you've hired a good manager, that should be true for you. So here, if we're looking at, that means this is going to be a percentage of revenue. So what this would look like is that if this is your revenue, this is your variable costs. So no matter where you go, this is where your variable cost goes. So maybe in your industry, variable cost is 30%. In every industry, it is different. So maybe your industry is 30%. So up here, if you have $100, that means that right here, you have $30. But say it's more than that. Say if it's $1,000, that means right here, you have $300. See how that moves with your revenue? So then what happens below that is you go into this next phase, that this is called what we maybe just kind of for shorthand that we'll call OpEx, also called operating expense. These are the things that largely are fixed, not perfectly fixed, like your gas bill will change based on the time of year. If you're in Salt Lake City, your gas bill in the winter is super high. In the summer, it's not as high. But generally, we're going to call that fixed. And mainly, we're going to call that fixed. What we're really trying to say is just that it's different than variable. It's not the same thing as variable. Even if it does vary every month, your gas bill or your office expenses don't truly vary with revenue. You don't spend more on your office expenses if your revenue is through the roof. Ideally, what you're spending on office, what you're spending on these operating expenses is a straight line. So here, if you see variability, your OpEx just comes in as a straight line. And so the idea is that if you can get revenue to a certain point based off of your variable cost being at a certain point, then you have that straight line going across that is your fixed cost. What comes out the bottom is what we call net income. It's also what we call the bottom line, and also what we call profit. So interestingly enough, most businesses that fail are profitable, you just run out of cash. So here, with what Sealevel Insights is concerned with, we want you to be profitable, but more than that, we want you to keep cash in the bank, because several profitable companies fail because they run out of cash. But before you can know how to keep cash in the bank, you have to understand where profitability comes from. So you start with revenue, goes through your variable costs, then kind of filters through fixed costs, and then at the bottom comes out your profit. Beyond that is where we start to look at cash flow, but that's not what the profit and loss statement worries about. The profit and loss does not worry about cash. It worries about profitability. So this is where your profitability is. If you can spend $100 at the top, or $1,000 at the top, $300 in variable, and this is $400, then in the end, right down here at the bottom, you're looking at $300 in profit. My name's Josh Rosenthal, Sealevel Insights, sealevelinsights.com. We'll see you next time where we talk about the balance sheet. See you then.